In the energy quadrant, crude oil down over 4% today. Definitely shortened session, holiday trading with low volume. But the volume wasn't as bad as you might think, and it was extended because of the big decline. The Brent WTI spread also widened a little bit as Brent crude oil fell a little bit more than that and then rebounded in toward the end of the day. But WTI was definitely the big story. As you saw this push down make a dramatic weekly turnaround, we were never really up strong on the week except for Monday. And then we kind of went sideways, and this made it a dramatically negative week in the price of WTI when compared to recent trade. We'd been trading up toward the top of the recent range. This dropped us all the way back to the middle of the recent range. The rig counts came out today, and actually 663, down another 3. We've now got 6 consecutive drops of U.S. oil rig counts, so they continue to fall. We haven't been at 800 since really going all the way back to like May of this year, and we've been below 600 now for quite a while. So rig counts continue to fall. You would think that would support the market a little bit, but right now U.S. production hasn't dropped off to match that. That could be due to recent technology. But one of the things that could be hurting crude oil and getting longs to sell out today is the OPEC meeting next week. The entire time this OPEC meeting has been talked about, most people thought that there would be a larger production cut. But in the face of the Saudi Aramco IPO, which is the day before the OPEC meeting, Saudi Arabia, who is basically OPEC, might have less of an incentive to try and move the price of crude oil around rather than manage the balance sheet of Saudi Aramco based on where the price of crude oil is. And that's a lot of the conversation. Plus, we had the increased tension from the president signing the Hong Kong Democracy and Human Rights Act, which is now a bill that mandates sanctions on China and really annoyed China, angered China, as they stated in their public media that they would be retaliating against the U.S., so that takes the demand picture out as well. So crude oil falls in the face of some of the risk-off sentiment that we're seeing, asset weakness across the board, but crude definitely seems to have taken the brunt of that hit.